What's up, everybody? Michael Silva here with my sidekick Coco to talk about the SP 500 technical analysis update. Today's date is May 6th. Coco actually taught me everything I know about technical analysis, and now I'm trying to share it with you. So buckle up. You're in for a bumpy ride.
Isn't that right? Isn't that right, little poo-poos?
All right, so on my last video, I posted a potential for a head and shoulders pattern. And what has happened in the last couple of days was pretty interesting. Let's go ahead and take a look. If I go ahead and draw out a blue line right there, let's call it resistance because that's what it is. I'm going to look at not today's stuff we're going to talk about today, and we're going to also hop into the intraday portion of that. I'll give you an idea of kind of where I see it going from here. This day right here, this little indecision candle, kind of inverted, almost, I don't even know what you want to call this. I would just call it an indecision candle. Like it didn't really know where it wanted to go because it basically opened and closed in the same place, but it did have a lot of price action within that day. If you notice at the wick, it went all the way up here to this blue line and got rejected. That was the gap fill that I was discussing on my previous video. This day right here, so it opened down here, closed up here, and then it gapped up, this monster gap. Well, I mean, not monster, but it was a pretty decent sized gap, and it went all the way up. It was looking extremely bullish throughout the day and then got rejected intraday to basically close where it happened. Now that right there is a gap and trap. Today, this is more of a gap and slap because not only did we gap up and then push higher back to that resistance line, it closed lower than the previous day. That's a slap in the face for the bulls. Now, it's very interesting where this happened to close. It didn't quite close right at this candle, right below this candle where this candle closed. So it is sitting kind of on this pretty big area of support. As you can see, it was kind of rejected right here, and then it was rejected here, here, it held up here, and over here too. So it's actually at a very interesting level. Now, this was very bearish move for the day, but we really need to look into the intraday to see how it played out. The MACD down here is still doing what it's doing. It's not curled over completely. It's just pinpoint touching each other. The two lines very close together. It's still above the zero. All right, we are here looking at the 30-minute time frame. This is going to give us a good idea as to where the momentum's kind of headed and how it finished off for the day. Now, as you can see here, we had kind of a pattern start throughout the day where, let me see, where the May 6th. So right here, we opened up here for the day, and we got pushed higher and higher. If you were watching this intraday, you were well aware it looked like we were going to have a great day because we had this big gap up from this candle up to here, and then we kept on getting pushed higher, and then we got knocked down. Now that knockdown from this point where it got rejected, as you can see, it got rejected at a pretty resistant area right now. If you see from back here, rejected, okay? It held up here, and then when it came down after moving sideways for a while, typically when you go sideways for a while and it does break that resistance or support, it's more of a forceful flush. So then it came all the way down, came back up, back tested it, which typically takes place, and now it formed this kind of I'd say you can call this a bull flag. That's probably, I guess, the more technical pattern you can call it. I just say that it was a bear pole and then formed a cliff, which is, it's the same thing. Yeah, it's a bear flag or basically a cliff. I just call it a cliff because it looks like somebody jumps off when you do fall off, or when it gets flushed. So it pulled down pretty significantly. Yes, it stuck within this somewhat of a channel, and then at the last 30 minutes of the day, it was just this monster move down. Just boom, 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 nonstop down to about 28.45, but it stopped at a very interesting level. It stopped to close the gap from May 4th. Now, it didn't quite close it all the way, so it's going to be very interesting to see what happened after hours and how it's going to happen pre-market coming into tomorrow. So if If we can start seeing the 30-minute time frame kind of move sideways and then flush again and see a very similar pattern to what we saw here, boom, 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 and we start getting hourly closes under this, and we also get 30-minute closes under this, and we start seeing the 20-period moving average, that was a good indicator. I had the 200 up, but I put the 20 because the 20 really helps with seeing where momentum is headed. We have closed below the 20-period moving average. That doesn't mean it's going to hold, but it does give us some insight as to where things might go. Yes, so this looks bearish. It's going to be interesting to see if we can get the break and start getting candles closing below this to see further move to the downside. So that, to me, looks pretty bearish overall. If you watch my previous video where I said that a storm was coming, this looks like the head and shoulders pattern is forming, but it is still too early to tell. This is just playing day by day, looking at the technicals and just trading momentum. If you guys are day traders, if you're long-term holders, right? As of right now, I am not holding. There's not a setup for me that I want to hold overnight at this particular time. However, I am there intraday trading various stocks within the SP 500. So let's go ahead and hop back over to the daily to see if anything else stands out. All right, so we are here at the daily, and I was recently just talking about the 20-period moving average. Now, look at the 20-period moving average here on the daily chart. Notice how it is still above the 20-period moving average. When the 20-period moving average is broken, like I was talking about, it sometimes helps to see where the trend may be going. And as you can see, it got rejected previously. And when it did break above, it stayed above that yellow line, that yellow brick road. It kept on going and going. So, for example, if you really wanted to trade the 20-period moving average, notice how when it broke out, you could have went long, and then you could just have a stop loss trailing behind every day with the 20-period moving average. And sometimes that plays out really well. You'd actually technically still be in the trade if that was the case. So not too bad looking at that way if you want to really simplify trades. If I go back in time, notice when it broke through the 20-period moving average, and you, imagine being in that trade, right? Is if you were just trading the yellow brick road or the 20-period moving average. It broke down, you would have followed it all the way down. I wouldn't even think you would have got stopped here at this point. Maybe not. That's really short. That'd be a tight stop loss if you were following the yellow brick road as your stop loss. And then finally you had the gap up and would have got stopped up here. But if you were following the 20-period moving average, you would have just reversed your position and then came up here. So I do like trading the 20-period moving average on swing trades. It is pretty unique how it plays out. But if we start getting the daily to close below this, the 20-period moving average, significantly, like a full candle close, and even right there next to the 50-period moving average, we might really start seeing this move downwards and start seeing the head and shoulders pattern really play out. The head and shoulders pattern, what I was talking about, was this right here coming. Now, yes, somebody pointed out the other day, it's actually technically more diagonal. It's not actually, it's not straight. Yeah, that's true. It is. I'll give them that. But keep in mind, it doesn't take away the fact that there's still a lot of support in this area. So it would really have to break here. Like, yeah, if you wanted to trade it from this point down to here, cool. But if it really breaks this 27, let's just call it 27.30, just to, I don't know, maybe a little bit higher. I don't know. This zone, this range, right? So you had this kind of break out to here and then pull back, and then here is your first shoulder. Then you have your head that came up all the way here, and then so forth. So yeah, like I still think that this pattern is somewhat playing out. Anything could happen in the markets. We're seeing that take place right now. Who knows what the Fed is capable of doing or what they're going to start doing. They did, I posted something about an article from Market Watch saying that they're going to start in early May buying corporate bond ETFs. So, I personally think that would be a negative impact on the markets. But gosh, who knows? We just got to wait and see how it goes. As of right now, not holding any overnight trades. I will be trading intraday depending on where price momentum goes. But that is your daily update for the S&P 500. That's just the technicals. Hope you guys are having a good day, and I will see you, and hopefully Coco will see you all tomorrow.